but we're going to wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Welcome back to the program. This is your Real Estate Chalk Talk with the Hittner Group at Caldwell Banker Realty. 612-627-8000. 612-627-8000. We've been on the air 16 years. We're coming into our 16th season.
Seriously?
Yeah.
How do you know that?
Well, I mean, how do I know that? Because I keep track of it. But I'm the one that signs the contract.
Wow.
16 years are coming in.
Wow.
All right. 612-627-8000. What's up?
A lot. Rates. I almost feel like we got to change the intro. Free money. That's a tough sell. That's a
right
tough
now.
intro.
Yeah.
Oh man. So great. Good. Yeah. Bad week actually.
Is
really
it been a bad week?
Yeah.
What makes a bad week?
Well, let me tell you what made it a bad week. Let me just run through what came out this week. Consumer Price Index. The July Consumer Price Index report showed that overall inflation increased by 0.2%, which was lower than the estimate of 0.3%, and a good number. Year over year, however, increased from 3 to 3.2, which in line with expectations, slightly negative, blah, blah, blah. Core rate went up.
Core rate of what?
Core rate of inflation, which strips out food and energy, also increased by 0.2.
Strip out food and energy, and they call that a core rate.
Yeah.
We're going to strip out all the things that our citizenry buys every single day, and somehow that's a number that people can...
That's a better number.
Makes sense. Yeah,
right.
That looks better.
It says the year-over-year core CPI decreased from 4.8 to 4.7. So they saw that. I mean, rates went... It's so frustrating because everybody good in our industry that we listen to says, I'm sending out emails because we subscribe to this stuff, so we get the information like, hey, lock everything up. We got this coming out, and then rates actually go the other way, and then they come
next week. We're going to do a segment on the experts.
On the experts,
because I got this thing about experts
that they're not really experts.
They're never right. And we listen to them.
Yeah.
And it's like, I don't know what the deal is, because we listen to these people, and they're never right. And no one ever goes back and checks them.
Well, our people actually go back, and they did a good job of owning it, saying, hey, we were off here, here's what happened, and then this happened as well, which we didn't anticipate, and blah, 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 so. But it is interesting. So energy prices rose 0.2 gallon. Gasoline only rose 0.1%. Food prices rose 0.2, all lower than markets had feared. But year-to-date, 16% increase overall. I mean, the inflation thing isn't getting tapped down, and that's what the concern is a little bit, and that's why we saw rates go up again. I mean, on the average right now, 30-year fixed money is low sevens if you're really, really solid, and it's mid sevens if you're like way down to like a 740 score, which used to be awesome credit, So, but you get in the high sixes for credit, and you're talking mid sevens.
So if you stop the thing about there's all this discussion about inflation, right? So let's just ask the question: what causes inflation?
What causes inflation?
What causes inflation? What causes inflation, by definition, from an economist, is too many dollars chasing too few goods, right? So there's two ways to attack that problem. One is to reduce the number of dollars.
Yeah,
right?
Through inflation. Yep.
Which is what this administration has chosen to do.
Yep, they're choosing.
So they make the money more expensive, so fewer people will have the money, or choose to get the money
because everything's more expensive.
Because everything's more expensive, so they just say, nope, I'm not buying that car because the rates are now 8% on a car loan.
Yep.
I'm not buying that house because the rates are 7.5% on buying a house. So they reduce the number of dollars chasing goods.
Yep,
that's a downward spiraling economy.
And guess who that hurts?
It hurts the consumer,
middle class,
the middle class, and it brings about a recession.
Yep.
Okay. Dumbest thing ever.
Yep.
When Reagan was president, he had supply side economics.
Yep.
That's what he said. He said, well, if you can make money more expensive and reduce the demand, why don't we just increase the supply? So instead of having too many dollars chasing too few goods, we have a lot of dollars chasing a lot of goods.
So instead of selling 10 cups, let's sell 1,000 cups.
Let's make 20
cups. So
the
prices on the cups go down because we have 1,000 to sell today. Right, versus 10.
And that's a growing economy because now the factories say, geez, we got to increase production.
Let's go.
Because we can make more cups. We have affordable financing to build our new factory to make more cups.
Yep.
That's a way to grow the economy, keep inflation under control, and it's good for the consumer.
Yep, because it's lowering prices. So, but it's counter to what's happening right now.
It's
for sure
diametrically opposed to what's happening now. It's complete opposite of what's happening now.
And it's super frustrating because it's limiting people. And we always say buy the house, rent the interest rate, and all that. But at the end of the day, it does shift that payment. People need to be prepared for that payment now.
Right.
We anticipate that they go down, but we anticipate they go down May 10th. May 10th, there's some this, and then over this year, and then the 200-day moving average and the 100-day moving average. They have all this stuff to say this is the day. Well, it didn't happen.
And what it does is it artificially increases all of the costs of everything.
Everything.
So now you've got something.
Where do you notice it the most?
Well, mostly it's in transportation and shipping costs and things like that. I mean, look at UPS now, just settled. You know what the average UPS driver makes? UPS employee. The average UPS employee, what do you think they make?
Like warehouse
just
driver?
Across the board. Average UPS employee.
$70,000.
It's over $100,000 a year for the average UPS employee. Well, where do you think, who pays for that?
Well, people that are receiving the goods.
We used to have free shipping on stuff.
Yep.
You notice there's no free shipping anymore?
No, there's
not. Because you can't.
Right.
So that's one way that it happens. What else are you seeing now that you haven't seen in decades? Big strikes.
Fake?
Big strikes.
Oh, big strikes.
Major strikes. UAW going for a 40% increase. The auto workers, a 40% increase. Well, that's going to raise the cost of a car by a couple of $1,000 a pop.
Yep, even more, right? And it's already up.
It's already up. So I mean, and at the end of the day, you can't blame the worker because his groceries cost 30% more than they did a year ago.
And they want a little bump in their wage.
They want to be able to pay for it. Gas costs 30% more, or 30% more than it did when Trump was president. You got to fill the tank up with gas. I need more money. I can't be working on wages that were set based on an economy of 3 years ago and pay for the economy today. It doesn't work for me. My family's out of money. No,
I know. Well, one of the things that we look at from a company standpoint is we're making less money now than we did when rates were. And I think sometimes people think, "Oh my gosh, rates are at 7.5. You guys
must be killing it."
Yeah, you're killing it. No, we're making less than we ever have because you just have to give. You almost have to give the stuff away because it's so high.
Right.
And you're going. We just have to be competitive. And you're doing it just like this sucks. I'm sorry. Here, let's do a price exception here. Let's do this. Let's get rid of this. Let's try to get you in just because you need every deal right now. Let's just get you in. So now you're a client because we know rates come down and we're going to refinance you and get you in a better financial position. But man, oh man, I'm doing more budgeting with people than I've ever done. I've always liked doing that piece, but when rates are at 3%, just like, take it. You don't do right now. You're budgeting. You're saying, okay, when is that rate going to go down? Can we do like a 2-1 buy down, a 1-0 buy down, where we're starting lower but knowing that rate's going to go up? But you're doing a 2-1 buy down now, and you're starting at 5.5, right? So it's like, that's not great. Do a 1-0 buy down, a 1% buy down. You're at 6.5. It's still not great, right?
So what does that, when you say 1.6 or 2-1, what's that mean?
It just means that we start with an interest rate 2% under what the market is. So if
what does that cost?
It costs about 1.1 so 1%, just rough numbers, 1%.
So if you're buying a $400,000, about $4,000.
Yeah, of whatever the loan amount is, though.
Right.
Yep. So we're doing 1-0 buy downs for free right now. That costs us money, but again, it helps us get that lower payment.
And what would you say, just a short time left, but what would you say is a recommendation for someone who comes to you and says, I just want to buy the rate down to a thing that I can just I don't want to have to refinance. I want to buy it down to 4.5%. Is that even possible?
Yeah, but it costs you tens of thousands of. It would cost you $10,000 to $20,000. So it would make no sense.
Okay.
It'd make absolutely.
You're better off
no
to pay a little extra and then wait for
a
the
little
refi.
bit, yeah, because you're not going to do that, and we're going to drop that rate. And then when the rate actually drops to 5.5, and I call you, and you're like, "But I just, So let's not do that.
Okay.
Let's not. let's not try to be all fancy. Let's just like get in, make sure you qualify, But there's an article that was out just said, hey, mortgage rates mysteriously surge back towards long-term highs. Because when it says mysteriously surge, it's because no one can figure out this dumb market of ours, So, but let's at least have the conversation. Let's position you well financially to withstand this, and then know like, hey, better days are coming. We'll lower that rate again.
Forecast. I heard an article that they're saying that rates could go in the 12% range.
I've never heard that.
No.
I've heard low 8s, which we're sniffing.
Yeah.
So anyway, give me a call regardless, 651-231-2500. Again, 651-231-2500. And let's have a conversation, because the other thing that's going up, Keith, is credit card interest rates. And we are still doing refinances. We had 8 last month that we did, because that is running at 28%.
Oof. 612-627-8000. Give us a call. Thanks for staying with us. We'll see you next week.